All right. I want to start out by saying thank you to everybody who left a comment in last night's episode about whether or not you were net long or net short or in cash. And one of the things I like to see is that the majority of you actually said that you were net long, which tells me you are following the chart and you are following price action. So that was great to see. And today you were rewarded because SPY did go up 0.58% and we did get that bull breakout we were expecting above 520. And if we look at today's close now to a new all-time high, whether you go by closing or even intraday all-time high, that is only now less than 1% away, and that is going to be the price target that I have drawn on the arrow at 525. So congratulations to all of you that are net long, even though the bears have been constantly telling us this is just a counter trend rally. And if we really just go back in time and look at it, the bears have been saying that every single one of these are counter trend rally, and every time we continued to go higher, they kept saying that we were going to get a lower high rejection. And even when we had the bull breakout, they were still saying we're going to get the lower high rejection, and they're still thinking that we're going to go lower and this is not a bull market. But obviously we know that's not true. We can see we're very close to all-time high. We have the higher lows and the higher highs. All of the moving averages are stacked to support the bulls and they're all positively sloping. So this is still a bull market with a lot of upward momentum, which means price is likely going to go higher as long as we can continue to get these breakouts and hold above support. So we still want to stay risk on SPY, which means that we're staying long and we're staying bull while we're above 513. And if you want to get really aggressive with your risk level and you don't mind getting stopped out even if the market's going higher, then you're going to want to use this risk level right around 517. But we're getting bull breakouts with a very strong bull trend, so it does look like we will make that brand new all-time high, and I do think the minimum all-time high is going to be 525, but I think we're going to have enough juice and enough energy to push all the way into the 530s. So we'll play it day by day. Right now everything still looks bullish, so stay on that bull, and if we do get any sort of dips in this market, I still think it's going to be a buy the dip opportunity for higher prices. In the NASDAQ 100 triple Qs, we were up 0.22% today, and the tech sector wasn't doing the best today. And I think today we'll also look at the financial sector. So you're going to see a lot of the sectors are doing very well, and tech was just really cooling down. But if you look at the price action, we're still above a rising 5 VMA. We did not break down below it, and we actually bounced off of it as support. And I think from here, we're going to push higher towards 442, and then the top of the range at 448, and eventually make that brand new all-time high at 453. Any pullback is a buying opportunity as long as we can hold above support at 434 and 436. So do not be afraid to buy the dip because these are very low risk entries, and if we break below support, you can simply just get risk off. On the Dow Jones, we were up 0.9% today, and we are extremely close to the price target, which is right here at 395, and I do think we are going to hit that price target tomorrow. And then once we break through 395, we're going to be looking for resistance right around 398 and a brand new all-time high price target at 400. So in the Dow Jones, it's really just as simple as staying bullish while we're above 385 and get risk off if we break below it. On the Russell 2000 IWM ETF, we were up 1.02% today, and we did fill the gap at 204.5, and I told you that was the highest probability chance because we had the gap to the downside, but this is likely just a breakaway gap as we continue the bull trend. So I told you we would likely fill the up gap and then continue higher towards 207 and 210. So as long as we're above 203, I see no reason to change that projection. I think we're going higher towards 207 and 210. And if we do get a dip, you can stay bull as long as we can hold above support at 199 and 200, and then just simply get risk off if we break down below that. You can also use the risk level up here at 203. All right, tonight I want to do something a little different. Instead of looking at ARKK, I want to look at the financial sector because financials have this very bullish higher high, higher low breakout, and the higher high breakout was above 41, and it looks like we're pushing back towards the previous all-time high at 42, and then I think we'll make a brand new all-time high at 42.5 and just below 43. So with the financials looking this bullish, especially if you look at the weekly chart, it is very difficult to understand how so many people are still bearish on this market, and we can look at the weekly chart very quickly, and you can see on the weekly chart we're getting a very powerful bullish impulse, and we're very close to a new all-time high. So with the financial sector looking this strong and only one more day to close out the week, it's going to be very difficult going into next week as a bear, and that's why I tell you I still think this is a buy the dip market. So if you're getting any dips in some market moving names, you can still continue to load up long swing. On the VIX, we were down 2.39% today, and the VIX is finally down here near 12.8, and this is where the VIX is going to typically be in that bull market mode where the bull trend gets very powerful as fear is leaving the market, and this is also time if you want hedges to start loading up on cheap hedges while insurance is cheap. But just keep in mind that is just insurance. You're not shorting the market just because the VIX is low. You're always going to have a low VIX in a bull market, and at some point volatility will come back to the market, but you remember the VIX can stay down here for many weeks and many months. So just because we have a low VIX is not reason in itself to become a bear. On Bitcoin, we're currently trading above 62,000, and I told you last night there was a bullish scenario where we get a higher low and then a bull breakout, but in order to get bullish on Bitcoin, we will need that higher high breakout above 65,000. So while we are getting this bounce, we have to remember this is still a downtrend and we're just bouncing back into resistance. So try not to get too bullish on Bitcoin until we get that higher high breakout and confirmation this is a higher low. Otherwise, it is still possible with all of these lower highs that we will get a rejection and go down towards 52,000. So I'm very neutral on Bitcoin right now. I think it has a bearish configuration, but that's going to change very quickly if it gets the bull breakout, and then I'll get a lot more bullish. But right now, if I had to lean to any direction, I still think we're going lower, and this is going to fail at resistance and then start to move down very quickly as these Bollinger Bands expand and allow for price to go lower. On Nvidia stock, we were down 1.84% today, and Nvidia did break down below the 5 VMA, and there is a gap to fill down here just below 863 and a support at 857. But more importantly, there is a test of the breakout right here at 877. So if we come down to 877 and bounce, this is just going to be another higher low within a bull market as we continue towards my price target, which I'm calling between 994 and 1032. So as long as Nvidia can hold 877, it's very bullish. If it breaks below 877, it's getting a little less bullish, and it means we're likely coming down towards 857 to 863. So I still think this is a buy the dip stock within this zone. It's up to you whether or not you agree with me. And if we break down below 857, definitely get risk off because we're likely going lower. On Tesla stock, we were down 1.57% today, and we're still in this buy zone that I'm calling between 167 and 173. And I still think in the short term, this is a simple trade up to fill the gap at 177, but longer term, I think we're actually going higher towards 207. So manage your risk at 167. If we break below it, we're likely going lower, and this could still be a downtrend. But while we're above this support zone, what I'm calling the buy zone, I think you could take low risk longs as long as you are bullish on Tesla in the longer term. And if you're not bullish and you simply just want to wait for price action to tell us we're bullish, then we need to get that break above 185, and that'll tell us we're going to 207. On Apple stock, we were up 1% today, and Apple is looking more and more bullish each and every day, and we did hold that support at 181, so we didn't even go as low as I expected to put in the higher low between 177 and 179. And this is a very bullish candle pushing higher towards the high of the range at 187. So if we break through the top of that range at 187, we're well on our way towards my price targets at 190 and 195. And as you can tell, I do think we're going to get there this month, and I think it's going to happen very quickly. So you can stay bull above 181, and if we can't hold 181, I still think we're buying the dip between 177 and 179. So jumping back over to the S&P 500, we are absolutely crushing this market by simply being objective price action traders, and that is what I teach you to do each and every day on the Stock Channel Discord server, as well as sharing all of my technical analysis and my intraday updates, as well as my trade ideas. This is a market that a lot of people are getting wrong because honestly, I just think they're guessing and they're getting bearish for lots of reasons that are not on the chart. I think objectively following the chart, this has been a very simple market, and that is why we are absolutely crushing this market, because it's a very technically sound market and it's a very technically sound bull trend. And I think a lot of people are just getting lost in the noise. But again, I will give a lot of you credit for last night telling me that you were net long, which tells me that you are following the chart, and I was very happy to see that. So if you want to come crush the market with me and get access to all of my technical analysis updates and trade ideas, that's going to be in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.